Gas prices are still averaging north of $4 a gallon across the country, but our next guest says gas isn't as expensive as we all think. Tim Quinlan is a senior economist at Wells Fargo and joins us now. Tim, make your case, because when I filled up my gas tank last weekend, I paid a lot. It really surprised me.
Right. Yeah, I'm not going to make a ton of friends saying that gas is cheap right now. That's not really the point. And, I tried to begin the note with a big statement saying inflation is the biggest challenge to consumer spending, full stop. And higher gas prices do not help with that in any way. The point that we're making, though, is that over the last 25 years or so, income has actually grown a lot faster than gas prices has. And as a result of that, your dollar doesn't go as far as it did a couple of weeks ago, but it goes a lot farther than it did 20 or 30 years ago in terms of gas prices.
Hey, Tim, it's Julie here. So you kind of break it down and you look at how much gasoline you can buy with 1 hour of work. What did your findings tell you on that front?
Yeah, so there's a few different ways you can do this. You can use, deflators and, try to put an inflation-adjusted measure of gas prices. But we thought it would be a more intuitive way to think about it, to just say, at average hourly earnings, how much gas can you buy with 1 hour's worth of work? And, right now that's a little over 6 gallons of gas. And if you compare that to previous periods where gas prices were high, say 2008, for example, an hour's work only bought you a little over 4 gallons of gas. So you get almost 40% more gas for an hour's worth of work today than you did in prior periods when prices were spiking.
Hey, Tim, how does all of this break out in terms of among income strata, right? So when we see these prices go up, how does it affect higher income Americans versus lower income Americans?
Yeah, well, here also we're kind of breaking a little bit of ground. There's this narrative or understanding that higher gas prices disproportionately impact low-income people. And, it certainly is a burden on them. But the group that actually is impacted the most, the ones who spend a larger share of their disposable income on gasoline, is actually the middle class. And the way to kind of rationalize that is to consider that a lot of lower income households are more often taking the bus or walking to work, and middle income houses may have the benefit of a second vehicle, which of course requires more gas. So the outlays on the middle class are actually larger, even adjusted for the size of their income.
Tim, let's say gas prices stay over $4 an average, a gallon on average nationally through the summer. Is that recession inducing?
I don't think that gas prices at $4 alone are recession inducing, but I don't think that it's, I can't have my head in the sand on this issue completely. I mean, gas prices over $4 do force kind of some difficult trade-offs for consumers. It takes wallet share away from things that could be spent on something else. So it's certainly not a positive in the outlook here. I wouldn't completely rule out recession risks a little further out, but even by this summer, households are still pretty well capitalized. We've accumulated a lot of excess savings over the past couple of years. If you're talking $5, $6 a gallon, now you're really starting to edge it out. And I recognize that in some markets, in California and other places, they're already seeing prices of that magnitude. But I don't think that anybody's going to drop their coffee and rush out to pencil in a recession forecast if oil prices stay at $4.50 through the summer months.
Well, speaking of California, Tim, the Governor Gavin Newsom just announced $9 billion in tax refunds for rising gas prices. And of course, you're well aware of the debate that there has been. Do we suspend gas taxes? Do we mail people checks because of the rising gas prices? Where do you stand on this?
I try to not take specific issues on it, but I think if we consider the fact that gas taxes began as kind of a way of doing highway use taxes, and I think some groups might be excluded from this, but by and large, a lot of large corporations have taken a pledge to get to zero carbon emissions over time. Wells Fargo certainly among them. And if we're going to achieve that and do that, it means we're going to be moving off of these fossil fuels. And so the revenue from gas taxes won't be there. And so I think thinking of it purely in that context may not make the best sense. And if this moment provides an opportunity to alleviate the burden or the additional burden of those gas taxes, then perhaps it's as good a time as any to consider it.
At the same time, Tim, I'm also curious from an economic perspective, if you are going to offer rebates or send checks in what is already a heavily inflationary environment, in other words, if I'm giving you more money because gas prices are going up, then aren't I just going to go out and spend that money on gas and further push up the prices?
Well, I mean, if let's say just for the fun of it that you don't even increase your spending on gas, let's say that it just alleviates the burden that you feel at the pump. It still frees up that cash for you to spend on other goods. And part of the reason why the United States has higher inflation than any other developed economy on earth is you can look at it glass half full. We've got stronger economic growth, or you can kind of take the other side of it and say, well, we've had all this extra fiscal stimulus policy, and that's pumped all these extra trillions of dollars into the economy. It's no wonder that good spending is as strong as it is. And yes, there are supply chain disruptions and port issues and things that stand in the way of goods distribution. But you've also had more than 10 years worth of consumer spending squashed into the last 2 years. And that's part of the reason why we do have some of these inflation problems. So, I'm not convinced that sending people more checks is the best way to help the problem.
Helpful insights indeed. Tim Quinlan, senior economist at Wells Fargo. Always good to see you. We'll talk to you soon.